Good morning and welcome to the Webinar Tuesday. Webinar Tuesday is hosted by the Virgin Islands Small Business Development Center in collaboration with the Small Business Administration. My name is Raymond Henry. I am a business counselor with the Virgin Islands Small Business Development Center. I will be your facilitator and moderator for today's session. Payroll Protection Program, all about forgiveness, is our focus today. Our presenter today is Lisa Chamely-Aqui, and she is the Outreach and Marketing Specialist at USVI SBA. For today's session, please put all your questions in the chat and they will be answered at the end of the presentation. Today's session is being recorded and it will be posted on our Facebook page and our YouTube channel at VI SBDC. I present to you Ms. Lisa Chamely-Aqui.
Good morning, everyone, and thanks for joining us this morning. Thank you to VI SBDC for hosting this morning's meeting. I am joined by my colleague, Senior Area Manager Wayne Huddleston, who is online and will be assisting in case of any internet interruptions or in case of, if you can put your questions in the chat, we will get to them right after, or if he has the answer, then he will answer them. So I'm going to go on. So today's subject is all about forgiveness, paycheck protection forgiveness, and the most recent updates came out in an IFR, and that was just on the 23rd of July. And you know, the things that you need to know about that in terms of the most recent updates to PPP forgiveness is that there is a more streamlined forgiveness process for PPP loans of $150,000 or less. So these are mainly things that you need to check with your lender on. One allows lenders to use a COVID reduction score, revenue reduction score at the time of forgiveness to document the required revenue reduction for second draw forgiveness loans. And also it allows lenders to opt in to a forgiveness process if they choose, so that borrowers can apply a loan forgiveness application directly through this platform. Now, the lenders that we have locally so far have not opted in because they are doing quite well with their forgiveness decisions, you know, and the timeliness of their decisions. So that's, you know, if you have any questions about that, please contact your lender. And then if there is an appeal of the SBA decision, then the latest guidance suggests that the deferment period will be, as long as that appeal is in a timely manner and there's like a 5-day written appeal process. Once you get a decision, your lender has to inform you and then you will appeal the process. And as long as that is done in a timely manner, then your loan will be deferred until SBA's Office of Hearings and Appeals issues a final decision on it. All of these are eligible for applications, not retroactively, but applications that are going forward that have not yet been filed. So in terms of the forgiveness payments to PPP lenders, as at July 12th, SBA has remitted over $4.3 million in forgiveness payment to lenders. So the process has, because the second draw loan is now closed, everyone's focus is on making sure that the PPP forgiveness is at full swing, that we can get the borrowers, you know, forgiveness as quickly as possible. And just if you have not yet submitted your forgiveness application, these are the updates that you should know, that, you know, for the second draw, the idle advances were no longer deducted from PPP loans. The expenses paid with your loan funds are federally tax deductible. And here in the VI, you'd consult your VI-BIR for details. The expanded forgivable expenses, there were 3 and now there are about 8, and we will cover them a little later on for unforgiven PPP loans. We talked about the simplified forgiveness application for PPP loans, $150,000 and under, and per the CARES Act, forgiven PPP loans are not federally taxable. So the first and second draw PPP loans made to eligible borrowers, okay, qualify for full loan forgiveness if during the covered period you maintained your employee and your compensation levels to those employees. The loan proceeds were spent primarily on payroll costs, and primarily means at least 60% of those proceeds, up to a maximum of 100%. And then if you chose the 60% minimum, then you had up to 40% on eligible non-payroll costs. Again, we encourage that the borrower can spend and can apply for forgiveness using 100% of the loan proceeds on payroll costs. And self-employed individuals and sole proprietors, now their ability to spend the entire loan on payroll costs depends on the chosen covered period. And that chosen covered period, remember the formula for the PPP forgiveness was 2.5 months worth of your annual income. And so it takes about 10, 11 weeks is the sweet spot for full forgiveness using payroll expenses. So what happens if a borrower spends less than 60% in payroll costs? It is not an all or nothing type of proposition. However, the amount that you would be eligible for forgiveness for will be reduced depending on how much less than 60% in payroll costs. So if you spent and there's a good example, if you received like a $100,000 PPP loan, the minimum that you're supposed to use on payroll is $60,000. However, if let's just say the borrower only spends $54,000 in payroll costs, you have to divide the $54,000 by 0.6. And the maximum forgiveness that you'd be eligible to apply for would then be 90 of that $100,000. And the remaining $10,000 would become a loan payable up to 5 years. It would be the maturity at 1% interest. So one of the changes in the Economic Aid Act was that the choice of covered period. Now, the covered period begins on the date the loan was originally disbursed. And some people ask, well, what does disbursed means? It's the day that that money hit your business account. That is the day of disbursement. And it ends on a date selected by you, the borrower, that is at least 8 weeks following that day, and to a maximum of 24 weeks or 168 days following the date of loan disbursement. All right, so that's, and you can choose depending on how depending on your level of activity, if you're at 100% capacity or if you're only at 75% capacity, and your payroll, if you can choose a time frame that shows 100% of the loan spent on payroll, you're in good standing for full loan forgiveness eligibility. Sorry, my mouse is giving me a little bit of a hard time. Here we go. All right, so what are the eligible payroll costs? First of all, it's only to employees whose residence is in the United States or its territories, obviously, in the form of salary, wages, commission, or similar compensation such as tips. All right, and based on the history of their tips or a good faith employer estimate of those tips, payment for vacation or for parental leave, family leave, medical leave, sick leave. If you have an allowance in your budget annually for separation or dismissal, as you know, the Department of Labor suggests and so on, and then that is also considered a payroll expense. if you have a payment for the provision of employee benefits in group healthcare or group life, like vision, dental insurance, and retirement, then the employer's portion of those benefits, what is paid, that is considered a payroll expense, not the employees, just the employers. And then state and local taxes assessed on compensation of employees. So if you pay that as an employer, then that too counts as a payroll cost. If you're an independent contractor or a sole proprietor, similarly, your wages, your commissions, your income, or your earnings from self-employment would all be considered eligible payroll costs. All right. Now, if you are a business and you employ a contractor or a self-employed person, you cannot use your payment to them as payroll costs for the business, only because they're not a permanent employee or they're not a full-time employee. They're an independent contractor. And under the guidelines of the PPP, they too were allowed to apply for a PPP loan themselves. So no double dipping there. All right, so what's the cash compensation cap per employee? So for each individual employee, the most you were allowed to apply for could not exceed a salary of $100,000 as prorated for the covered period. So even if you have an employee or you made more than $100,000 per year, you had to bring that down to a cap of $100,000 annually, and then your PPP loan and what you are applying for forgiveness on would be prorated for let's just say 11 or 12 weeks of that $100,000 as divided by the full. So for an 8-week covered period, that total, we have some examples, that total is capped at $15,385 per employee. And as you can see, the formula that they use would be the cap of $100,000 divided by 52 multiplied by 8. Now, this is only if you make over $100,000 and over. If you make less than $100,000, then this does not apply. For a 24-week covered period, that total is capped at $46,154 using the same formula. However, the maximum amount that a borrower can receive per employee is $20,833. So in order to meet that 24-week cap, you have to show that you have met some safe harbors, and we will talk about safe harbors in a few slides. So caps on loan forgiveness available for owner, employee, and self-employed individuals. And we had quite a few entrepreneurs apply for the PPP loan. And basically what this is saying is because of that cap of 20,000, first of all, if for a second draw loan, you were allowed to use 2.5 of 2019 or 2020 gross compensation up to 20,833, and that can be used to apply for forgiveness. So what all of this is saying is that for borrowers that elect to use a 10-week covered period, the cap is 10 weeks or 10 over 52 of the compensation, or 19,231 per individual. So in terms of the timing of the covered period that you choose to use, you have to be careful that you are not going over the cap, which is the 20,833. Otherwise, that's the amount that you will have for forgiveness, and the rest you won't be forgiven. All right, so what are the eligible non-payroll costs? In 2020, there were only 3 with the first draw loans, and many of those have already been submitted for forgiveness. They were business mortgage interest payment obligations, business rent obligations, and utility payments such as electricity, gas, water, telephone, or internet access. For all of these non-payroll costs, the business you had to prove that your account was in operation prior to February 15th, 2020. All right, and with regards to the mortgage, you can do current obligations during the covered period, but not any prepayment or the payment of principal. Then with the Economic Aid Act, the list of eligible non-payroll costs was expanded, and some of the expansions included covered operations expenditures such as business software or cloud computing services, covered supplier costs made pursuant to a contract order or purchase order. So let's just say, you know, you had a purchase order for, you know, gadgets or widgets, and that's been, you know, 5 years in the making, but you have a regular quarterly supply of them, then that would be considered an eligible non-payroll cost as long as it was essential to your business. Now, if you were in the restaurant or the food supply business, with respect to perishable goods, because of the food security issues and the fact that, you know, people had to shop around and prices were going up and down and up and down, as long as you got a supplier within the time of the covered period, you can write for perishable goods, then you can use that as eligible, an eligible non-payroll cost expense and apply that for forgiveness. And then covered worker protection expenditures. A lot of people had to invest in PPE and also, you know, change the facilities to allow for drive-through facilities or expansion of outdoor business space to allow for more people to be seated. Those kinds of worker protection expenditures would be allowable under payroll costs. There is one in gray that you see, covered property damage costs. That applied to states that where there was property damage and vandalism or looting due to public disturbances, but here in the Virgin Islands, that does not apply to us, in Puerto Rico neither, so that's why that one is in gray. So when must payroll costs and non-payroll costs be incurred and or paid to be eligible for forgiveness? That covered period, remember, from the date of disbursement to your choice of either a minimum of 8 weeks or a maximum of 24 weeks. And it could be any time within there. You could choose 14 weeks, 16 weeks, depending on what your business circumstances were like. So payroll costs paid during the covered period, and you want to see the paycheck being distributed. Now, because of that choice last in 2020, there was an alternative payroll covered period, which was for every 2 weeks, and that has gone away because you had a choice of covered period. You have payroll costs incurred during the covered period that was earned by the employee, but let's just say there is a lag of, you know, your payroll cost ends this Friday, or your payroll cycle ends this Friday, but you don't pay your employees till next week Friday. If this Friday is in the covered period, then that cost is incurred in the covered period, and even though you pay it after the covered period in your regular payment cycle, then that is also eligible for forgiveness. Similarly, for the non-payroll costs paid during the covered period and incurred during the covered period and paid on or before the regular billing cycle date, when the billing date is after the covered period. So here are the key forgiveness reduction criteria, again summarized. You want to retain your full-time employee equivalent. So if you applied and you had 10 full-time employees during the covered period when you're applying for forgiveness, you want to see that you were able to retain 10 full-time employees. You want to see salary and wage reductions per employee. You want to see that maintained, that you were able to maintain the salaries and wages of your employees during the covered period as you applied for the loan, and so that it matches back to what you say your annual payroll was. Be careful with the owner's compensation rules, and remember the 100,000 salary limit for all employees prorated for the covered period. You want to make sure that you've met that 60% payroll expense threshold, and you want to make sure that you're not getting creative with eligible non-payroll expenses. When in doubt, use payroll as your forgiveness. You know, defer to payroll for full forgiveness. So what happens in terms of what will reduce your PPP loan forgiveness amount? We spoke about if you use less than 60% of your PPP loan on payroll, then your forgiveness amount will be reduced by the percent that you used less than 60% of. All right. But you have safe harbors, and the safe harbors are as follows. If you, let's just say you had to shut down at the beginning of COVID, or you had to shut down within because of rules, then if you offered to restore and your employees went on unemployment, if you offered to restore employee hours at the same salary or wages, and you have documentation that they said, no, thank you, I need to stay home because I have no childcare, or whatever it was, as long as you have documented proof that you offered to restore the employees' hours at the same salary or wages, all right, then that does not negatively impact your forgiveness eligibility or your forgiveness amount. If you had to fire an employee for cause, or if an employee voluntarily resigned or voluntarily requested a schedule reduction, and you have documentation of that, you won't be penalized in terms of forgiveness eligibility. If you had to reduce staff, but you were able to eliminate those reductions by December 31st, 2020 in the first draw loans in 2020, or if it was a PPP loan made in 2021, by the last day of the loans covered period, if you were able to bring your staffing rate back up to full complement, then that will not negatively impact your forgiveness eligibility. And then if you were unable to return to the same level of business activity as you were before February 15th, 2020, because of governor's orders, because of CDC guidelines, because you were only allowed, you had a complete shutdown, or you were only allowed to operate at 25 or 50% capacity, then as long as you continued to pay your staff, even though they couldn't operate at that time, you could apply for full forgiveness. All right. And again, if you have a PPP loan of 50,000 or less, the reductions in FTE employees and salary reductions of, if in applying for forgiveness, the general rule is if you reduced hours or salaries by more than 25%, you will no longer be eligible for full forgiveness unless you meet one of these safe harbors. If you got a loan of 50,000 or less, those FTE reductions and those salary reductions do not apply to your loan, only if you had $50,000 or less. This continues, just to say, what effect does a reduction in the full-time equivalent have on loan forgiveness amount? It's the same percent. So if you had to, if you reduce salary hours by 50% over the covered period, but everybody else was operating at full capacity, then your PPP forgiveness will be reduced by 50% of whatever the loan is, and the rest will be translated into a loan at 1%. So there are some examples here of, of situations where that may happen. So what are the 5 FTE reduction exceptions? Let's just go over them again. If you will not be penalized for forgiveness, or it will not have a negative impact on your forgiveness of the loan if you had an employee who during the 8 to 24 week covered period was fired for cause, or they voluntarily resigned, or they voluntarily requested and received a reduction in their hours, or if you made a written offer to rehire that employee or restore any reduction in hours at the same salary or wages, but the employee rejected. Or if you were unable to rehire individuals who were employees on February 15th, before December 31st, or the last day of the covered period, all of these things, it's important to have written records of your efforts to hire a similarly qualified individual, or the documentation of that employee saying, I need to have my hours reduced for X reason. But as much documentation as you can provide, that shows evidence of the safe harbor, which they will use to consider, again, full forgiveness of that loan. So what are the options for your PPP forgiveness application forms? First of all, if you are downloading a form off the internet of SBA.gov, we encourage you to get it directly from our source, www.sba.gov. And you go to COVID-19, and then you go to PPP, and you will see the forms there. Make sure that that form reflects a date of January 19th, 2021. If it shows a date at the top right, and I'll show you an example in a couple of slides, then that is an outdated form and it will not be accepted onto the platform. Many of the lenders locally have their own platform where they've uploaded the forms, and so you are just filling out the form online through your lender, and that's fine too. So the three options for forms are the 3508S, and S stands for simplified, the 3508EZ, and well, you know, a little play on it's easier, EA, you know, and then 3508, which is the form for more complicated organizational structures. So the 3508S, if you are a borrower who received a loan of $150,000 or less, then that's the form that you need to fill. Now, and there's a little note under there that, refers to what we said earlier, that only the borrowers with loans of $50,000 or less may use the de minimis exemption from the FTE and salary wage reduction penalty. And that penalty is more than 25% of, if you reduced your full-time employee or their salaries or wages more than 25%, you will receive a reduction penalty on your forgiveness. But that only applies to people who have loans of $50 to $150,000 or more. All right. And if you do have that and you are going to be penalized, you need to use the 3508, the calculations in the 3508, and make sure that you have that for your lender. Now, the 3508EZ, if your PPP loan was more than $150,000, as well, if you have no employees, or if you did not reduce the hours or salaries less than 25%, but your loan is over $150,000, then your form will be the 3508EZ. And then for everyone else who received a PPP loan, but again, we talked about, they either have, they've reduced hours and salaries more than 25%, or there's a much more complex calculation structure, then you use form 3508. And here's what the top of the form 3508 S looks like. You see the third line down, it says revised January 19th, 2021. So you know that you're looking at the right form. The areas that are highlighted are the areas, it is very transparent in terms of the form really helps you fill out your forgiveness application, and there are detailed instructions to the end of each form in terms of what you need to put in, what documentation you need to supply to your lender, and then they in turn have specifics of what they have to supply to SBA or not supply to SBA. The difference with the 3508S is, even though you supply documentation to your lender, a lot of that documentation does not have to be supplied to SBA, because SBA depends on the lender's assessment of your loan primarily, unless your loan comes under review for one reason or the other. 3508EZ, here's the checklist. If your loan amount is more than $150,000, and you can check at least one of the two boxes below, and the two boxes below look like these. So if you can check that you did not reduce annual salary or hourly wages more than 25%, and no salary was over $100,000, and then if you were unable to operate during the covered period at the same level that you were before February 15th, 2020. So it is very, as long as you follow the instructions on the forms, it's pretty easy to follow through. All right. So, you should, in preparation for submitting your forgiveness application, proceed with running your numbers. So if you're ready to file or you've finished your covered period, here is where you get your bank statements in order, your payroll slips, your if you're going to show a utility expense, you want to show that that account was in operation before February 2020, and things like that. And you want to make sure that you are not submitting to your lender handwritten documents with notes and scribbles all over it. The clearer that you can submit your documentation, the cleaner that documentation is. If you have to do a little spreadsheet or, and if it is more complicated, get an accountant to help you, or use a bookkeeper to help streamline those documents so that you can send it to your lender so that they have the easiest time processing your documentation and submitting it to SBA. For tax purposes, borrowers need to keep all supporting documentation for 6 years after the loan is forgiven or repaid in full, including that documentation that it was not necessary to submit to the lender, just in case you get audited for tax purposes. So the loan forgiveness process and timeline, you as the borrower, you submit the forms and the documentation to the lender from whom you got your PPP loan. And the timeline for that is you have to submit it within 10 months of the end of your chosen covered period. Now, if a lender doesn't hear from you within those 10 months after the covered period, they will give you the benefit of the doubt and give you 24 weeks from the date of disbursement as your covered period. And then after the 10 months following, your loan becomes due for payment if they haven't seen a forgiveness application submitted. Okay. Once you submit your forgiveness application, the lender has 60 days to review the documentation, make sure that it's complete, and then submit their forgiveness decision on your loan to SBA. Then SBA reviews and remits. If they, SBA can review any loan of any size, and it's important to remember that even the $50,000 or less, I've seen where SBA has chosen to review depending on, eligibility of certain things, if there's, any red flags in your files, in your credit history, things like that. And the deferment period runs until the date, and the deferment period means the day that you have to start paying back that loan, or whatever is left that is not forgiven that transmits into a loan. So as soon as SBA remits payment to the lender, if there is a balance that turns into a loan, the lender has 5 days to let you know, and then you have to start payment then. All right. Or if you did not submit a timely application, then your deferment period runs out 10 months after the date of your the end of your covered period. So the lender has 4 decision options in terms of the documentation you send. 1, they can approve your loan in full or recommend to SBA that for a full approval. They can, approved in part, or they can deny, and then they can deny without prejudice. Deny without prejudice is when SBA notifies that a lender that your loan is being reviewed, all right, at the time that the borrower submits a loan forgiveness application. So the lender denial without prejudice is really when SBA has knowledge that the lender may not, they call the loan under review, and the lender will say it's a denial without prejudice. It just means that the loan is under review by SBA outside of our parameters. All right, and you can only appeal a lender decision if the lender denies your loan completely. If the lender approves your loan in part, you cannot appeal to SBA for the part that you want to. You have to deal with your lender on that. Either show more documentation to show why it should have been forgiven, or more should have been forgiven, or all should have been forgiven. But it's only if a lender outright denies your forgiveness, then you can appeal to SBA, and SBA has the choice whether or not to review your appeal. When SBA remits forgiveness to a lender, the lender must notify borrower that of the amount of the forgiveness payment received, or if SBA determined that no amount of the loan is eligible for forgiveness. And they also have to notify you in writing what's the due date of your borrowers of your first payment, if there is any. Those are the two things. And what are the loan terms and maturity? If it's not 100% forgiven, a fixed interest rate of 1%, no fees or prepayment. If you want to pay it all off in one fell swoop, no fees or prepayment penalties, a 5-year maturity for all loans taken after June 5th. And if your loan was before June 5th, it's 2 years. However, you can ask your lender in writing for a relaxation of that to extend your maturity for 5 years if you need lower loan payment options. Payments will start once the borrower knows how much of the PPP loan will be forgiven, and it starts 10 months after the last day of the covered period, as we discussed earlier. So this is just a little bit, for your knowledge, how the USVI and its small businesses has participated in the SBA COVID-19 programs. If you look at the third line down, total Paycheck Protection Program participation, we had 3,430 loans to small businesses in terms of the first draw and the second draw, both in 2020 and in 2021, to the value of $202.5 million. All right, if we look at the economic injury disaster loan, and these are updated to July 29th, 2021, we have small businesses, like 1,822 small businesses that have taken idle loans. And these are loans, these are not forgivable. These are the loans that are at 3.75% for small businesses with a maturity of 30 years. And there's been $106.6 million coming into the USVI with idle loans. The targeted and supplemental idle advances, which was something that, if you had an idle loan, they would relook the targeted advance up to 10,000 and the supplemental advance up to another 5,000, depending on how much income you lost. We had 139 of those approved for $990,000, almost $1 million. The Restaurant Revitalization Fund, we had 28 food and beverage businesses, small businesses in the territory who got RRF approvals to June 30th and to the value of almost $6 million. And then the shuttered venue operator grants to July 26th, we've had one Virgin Islands, cultural institution with live performing capacity be approved for a grant to the amount of almost $93,000. So that's just to give you a sense of how much of the, federal COVID-19 relief money that the U.S. Virgin Islands has tapped into. Again, we are here for assistance, not just for the time that we're on the seminar, but you can always email us. Our, Wayne Huddleston is a senior area manager, and his email is there, and his cell number, lisa.chamely-aqui@sba.gov. My cell number is there. If you have questions that come up even after this, feel free to ask us, and we'll be happy to answer your questions. If there is a specific question about your particular application or your particular business, that's what our partners, our resource partners, are here to give individual technical assistance to our small businesses. VI SBDC, who is hosting this morning's webinar on our behalf, all of their numbers and the info at visbdc.org. Raymond, who is our host this morning, is a financial counselor based on St. Thomas. We have Greg, who's on St. Croix. We have many technical counselors who can help with the specifics of your individual small businesses. We also have another resource partner in terms of SCORE USVI. If you need mentorship and advice from real-world business executives in person or online, and they also have a host, all of our partners have hosts of information that can be shared. And then we're going to open it up for questions at this point. I'm going to stop the share and check with the chat. And if you want to come off mute and ask a question, please feel free. Thank you.
Lisa, I believe we just have one question in chat here so far, and it's Leslie Fisher who's asking, can you show the forgiveness calculation for those who do not have 60% paid towards payroll? Okay, let me share the screen again. And there's an example there. And please note that you are also going to get a PDF of this presentation. SBDC has a PDF of the presentation that that they will send to you. So you will have the example. All right, let me just go back. I think that was it. No. Okay, so here is the example if a borrower spends $54,000. So again, if you spend less than 60%, you take that dollar amount spent in payroll costs and you divide it by 0.6. And then that's the maximum amount that qualifies for forgiveness. So this just kind of rounds it off to around, you know, the $100,000, but whichever, no matter what the amount of your loan is, the formula remains the same. Leslie, I hope that answers the question. I'll leave it on this for a bit. But again, you will get a copy of this so that you'll have that, you'll have the formula handy. Any other questions? All right, well, if we'll give it a few more minutes and then we are not in the business of keeping you, you know, for an entire hour. If we do not need the entire hour, again, you have our, Wayne and I will type our email addresses into the chat. So you have that handy in case you need us. And you'll also have it on the presentation. Here's mine. And Wayne, I'll put yours as well if you'd like. Yeah, sounds good if you're typing it. Thank you. I'm typing. There we go. And if we don't have other questions, then we will thank SBDC again for hosting SBDC webinar Tuesdays with SBA. We're happy to come on, and if there is anything that you want to know more about that you would like us to present on, please feel free to drop us an email, let us know. All right, I'm going to share one more slide with you. All right, bringing that back. Second. Oops. All right, I went one too fast. So here we go. The shared window is closed. Sorry. All right. We want
to thank Lisa Chamely-Aqui and the SBA for her presentation. And we welcome you to join us next week for Webinar Tuesday with SBA. The upcoming webinars are in the chat. We have on Thursday, Economic Development Commission Eligible Supplier Program on August the 5th. Then there is Benefits for Small Businesses on August the 19th. the Enterprise Zone Commission on August the 26th. We thank you for joining us, and we look forward to seeing you again. Have a great day, everyone.
Thank you all.